Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi, and the overall texture of the market is pretty much similar to what we saw for the last 2 or 3 trading sessions. We start off okay, and from there's a big tumble. And today, in fact, we went below the mark of 50-day moving average. Managed to recover just a smidge from there. So we are very, very precariously placed right now as far as the market mood is concerned. And across the board, whether it's the mid-cap, which has seen a downtick of over 2%, to the Nifty Bank, which is down 1.25%, there is that definite weakness across the board. India Wix, that's been the reason why we have seen this big volatility in the markets. That's managed to surge from a 5-week low all the way to a 15-month high in a matter of just 8 to 9 sessions. There have been a solid surge of almost 70% in the last 8 to 9 sessions, and that's something which the street is watching out for. It's heavyweight like Reliance, HDFC Bank, ICICI Bank, which is dragging the market right now. What's clearly holding up is only FMCG, Aisha, and that's the entire, thesis around that rural recovery, which is actually playing out.
Oh, yeah, absolutely. The commentary from the management so far, especially Dabur, Marico, GCPL, or for that matter, even Britannia, seems to be indicating that the rural recovery is very much in place. Volume growth, the outlook has been extremely strong from then. And, the fact that they've indicated that even pricing power is now coming back to the FMCG majors. So very positive commentary, and that's clearly reflective on the entire space today. I mean, pick up Unilever, which is the top Nifty mover today. That's almost surged 5% in an otherwise very weak market, one would say. Britannia higher by 2%, Nestle up 1.7%, ITC holding up 1%, even though it's not a pure play FMCG play. Marico has been a 9% gap up move from the word go, continues to maintain its pole position. Dabur holding up 6%, GCPL up 6%. So you can't really pinpoint any red within the FMCG pack. But that's not quite the case with the rest of the market, like Anisha was flagging off, which we will discuss with our chartists and fundamental experts as well. But look out for Titagarh Wagons too, because Morgan Stanley has now initiated coverage. They expect a 28% earnings CAGR over FY24 to 27%. So that stock as well has been very buoyant from the word go. Indus Tower, Macquarie, a downgrade coming in. They believe that in better visibility, while they do see that, but most of it is already in the price. And remember, the stock has shot up as well and seen quite a fair bit of run up year to date already. So 3.25% of a downtick coming in. I don't know if we can pick up, the YTD or the 1 month chart also actually of Indus Tower, because a chunk of the move in Indus Tower has really happened in, the last 1 month or so. Lupin, the US business has been below estimates, and one can see that reflect as well in the stock prices, straight away lower by 5%. But let's welcome on board Kunal as well as Naresh and find out what they're making of the market. We also have Jonathan Shizel joining in to throw in the perspective on what the fundamentals are, which are nagging the market right now. But Kunal, firstly, a word on the fundamental, on the charts, I beg your pardon, because it's almost a daily pattern when the market starts off okay, and in the last 1 hour it completely changes tide, and today it actually happened way before that.
Yeah, and I think one of the major reasons for that, Aisha, is because the VIX is now at 17.5. As compared to that, I think yesterday same time we were discussing, the VIX was almost 16.2, 16.35 odd levels, and a couple of days prior to that we were almost at sub 15 mark. So this is a very sharp adjustment to the VIX, and that's why you're seeing the sudden reaction, knee-jerk reaction from the indices as well as from the overall market breadth. I would believe that there could be a point where, say, in the next 1 or 2 days, you may probably see some bit of pause in the rise of VIX. If that happens, maybe a near-term bottom could be at play for the indices. But till the time VIX remains above the 14 mark, I would believe that the markets could remain a lot more choppier than what we've seen over the last few weeks and over the last few months.
Okay, that choppiness is something that we need to watch out for. Call it the election fear or the outcome of that. Maybe ahead of that, there's a bit of an adjustment because the phase 3 polling is underway. And if you go by the turnout data, it's not really impressive at this point of time. And that's been the trend in the first and the second phase as well, that the voter turnout was a little lower than what the street was expecting earlier. But let me put the spotlight on FMCG sector particularly. What's the take, Naresh, within FMCG and even IT for that matter? Both these defenses are doing a shade better than the rest of the markets. What would be your top pick within the two?
We had been in a downtrend for a long period of time. A lot of stocks are available at the same prices they were 3-4 years back also. So if you look at Hindustan Unilever, it is still below the prices where it peaked in 2020. So looks like a bottoming out case post the numbers for a few FMCG pack. Yesterday initiated a buy on Marico that has gapped up. So out here now ITC remains the interesting bet, which is where the stock has been sideways around that 430, 440 mark. So that has some upside towards 480. And on dips, Dabur would be the next bet. So overall, bullish on the FMCG pack, but would wait for a fade off and a little dip to get into these names.
Right, okay. Let me welcome on board Jonathan Shizel as well and find out what he's making of the market. Jonathan, hi, afternoon. Like our chartists were flagging off, a huge spike in the India VIX, clearly a gauge of the kind of fear out there in the market right now. You think all of that could be attributed to the elections which are currently underway? We're already in the third phase of polling, or do you think there are factors beyond that too?
Yeah, no, I'd agree with you. I think obviously clearly there is a level of uncertainty from election risk. I think also in addition, there's probably, I'm sure you've noticed that the Hong Kong and Chinese markets have been quite buoyant the last few days. And I think you might see a little bit at the sides anyway, a little bit of switching out of India into China in the very short term, which could slightly lead to a slight increase in volatility. But yes, it's election related.
The reason of that switch, is it purely because China is available very cheap, or the fact that India has stopped out and there are no fresh triggers per se? What do you think is the reason why FIIs are getting out of India and perhaps into China?
I think you're right. I think there's a valuation. Clearly, there's a massive valuation difference. That said, there has traditionally been a fairly large valuation difference for many years. So it wouldn't be that alone. But I think, clearly the Chinese, Hong Kong sort of universe has been underperforming to such an extent for a number of years that I think a lot of investors probably feel there's a trade involved and therefore book in a little bit of profit out of India, which has been a great trade over the last few years, and maybe in the very short term buy some of these beaten down Chinese shares for a trade, and then potentially when the election's out the way, head back to India. So who knows? But yeah, that's what I would feel maybe is happening.
But Jonathan, within India as well, there are pockets which are a bit undervalued or provide value, and case in point being private banks which haven't moved, the likes of HDFC Bank, Kotak Mahindra Bank, etc. FMCG had not done quite well in the last almost 12 months. Even IT for that matter has been a bit sideways. Yes, it's moved up a bit, but not to the extent of rest of the markets. Wouldn't it be a wise choice to perhaps put in some positions in these sectors?
Yeah, I agree. I mean, you could argue there's sort of some of those sectors are relatively defensive. The FMCG space globally has been pretty miserable for some time. And a lot of the big global players are hoping on India for the sort of growth story in their sales. That's began to perk up globally. So it'd be interesting to see if that will start shifting into India as well, where the stocks have been clear underperformers for some time. And obviously IT and some of the other sectors, Indian IT and outsourcing names, that also follows some of the big US names that have been struggling a bit in the space in the very short term. But yes, like in all indices, there's areas which are doing very well, and then other areas that are underperforming, and therefore for India dedicated investors, there's always something to have a look at.
Now, where within FMCG, and given the kind of move that you're seeing today, be it Marico, Dabur, GCPL, Unilever, Britannia, even Nestle, IITC, where is it that you can continue to initiate longs and continue to buy?
So I think ITC is very attractive. I think at current levels of 435, 440 on the spot basis, I think it's an excellent time to go for a long on ITC, because the pedigree of the stock is very strong, and we've seen from 500 odd levels the stock had come back towards, I think, 395, 396. That was the low ITC had made, and from there the stock has gone through a gradual recovery. So the chart patterns, the major correction that seems to be now behind, and the stock is already on the positive side in terms of trends. So I think at 435, 440 mark, it could be a very good buy. My expectation is that the stock could probably try and come back to that 465 to 480 odd levels. But I think more importantly, what we are also seeing today is the comeback on a bit of a volumes as well as high beta nature on the FMCG side, and I'm talking of the likes of HUL, etc., which have seen very strong surge of volumes and very strong price behavior to try and complement the volume surge for the stocks. So that indicates that we could be at a cusp of a very strong turnaround. HUL could be the other name. I think from 2200, 2250 odd mark, which was the bottom for the stock in the last few weeks, it's on the verge of coming towards the 2400 levels. I would believe after today's breakout, the stock opens up further room on the upside to levels of 2550, 2600 also.
Right, okay, that's the take coming in on what the FMCG basket is up to. But let's also check in on what's not holding out, because Bajaj Auto has seen a sizable move down, 4.5% lower over there. There's Shriram Finance as well, which is down about almost 3%. Tata Motors, IndusInd Bank, ONGC, Tata Steel, M&M, they're all seeing some weakness coming in. And of course, Reliance Industries, look at the move on the stock. It's down pretty much around the session lows. 1.6% of a dip is what you're seeing on the stock, although it was a lot worse previously as well. And ICICI Bank too, which is dragging about almost 1.6% along with Axis. Naresh, within the composition of the Nifty Bank, where is it that you see acute strength and weakness, if at all you see strength?
So clearly the strength has been in ICICI Bank, SBI and Axis. Taking out even today's move, we are still above the previous highs of 1110 and 1115 for ICICI Bank. So looks very promising. This remains a leader. Then Axis Bank, the last breakout was at 1120. We are still above those levels. State Bank of India, the last breakout was at 780. We are above those levels. So all these three names look interesting. The interesting part is we've started seeing a recovery or a base formation in HDFC Bank. The stock has started holding above 1480 levels for the last 3-4 weeks. And if that crosses 1540, that would be a short-term breakout. Kotak has not seen a follow-up selling pressure. So 1650 remains a pivot level. If it sustains above 1650, it again has a recovery chance towards 1750. So overall, the whole banking space looks interesting at current levels.
Index is interestingly poised. But Jonathan, what about the real estate pack? I mean, today there is a bit of a profit booking on the likes of Prestige Estate. It's down about 8%. Sobha is coming under pressure. Century Textiles, which is a bit of a play on real estate now, just reported its numbers and it looks like it's missed the street expectation because there's a sharp downtick on that one as well by 6%. Within real estate, is it the time perhaps to book profits entirely from that sector?
Yeah, it's a sector that we don't look a great deal at because it's obviously a very localized sector, and there are many factors at play that are rumbling around underneath. So you've got to have a good understanding of what's going on in each locality to really get a grip of the sector. But clearly, yeah, it had done reasonably well. I guess that's probably, it is I guess to a degree, quite a sort of election-related sector as well. So. Yeah, it's not a sector we have strong thoughts on either way.
Jonathan, where else do you think that, there is sort of exuberance when it comes to India equities? Any sectors which you may feel are priced to perfection right now?
Yeah, well, it's interesting because, as we were discussing just earlier, previously it was always focused on the FMCG space and the whole story of premiumization in the retail space in India. And huge opportunities there, whereas the reality over the last couple of years, as we just discussed, that sector's been a bit disappointing. I mean, otherwise, the basic consumption sectors, the also in addition, another great sector that I've always liked and will do for some time will be the private sector banking sector, which, as we've just discussed, there's the previous leader, HDFC, has been a bit disappointing since the merger. But I think that sector, for certainly when foreign investors look at India, that's a great way to play the broader Indian market. Yes, there's the HDFC is going through its indigestion of the merger, but it will come out of it eventually. So yeah, look, there's still some very interesting spaces within India available, and we do continue to like the market.
And on that note, we let you go. Appreciate you joining us on the show today. Let's take a short breather on the show, but when we come back, we'll put the spotlight on the FMCG sector and how strong is this recovery going to be in the rural sector.
Back with closing trades right here on ET. Now, it's really all about FMCG. The fact that volume growth revival is on the cards. That's the word that we're picking up from most FMCG majors. They're also seeing green shoots in rural demand. Here are a slice of all the managements we've spoken with: Unilever, Dabur, Britannia, Marico, as well as Cottage Consumer.
If you look back at our history, for about a 10-year history, we were growing roughly around 4% by volume and about 4% of price mix, and 1% by M&A. So there's no reason for us to at least not try and aspire for that sort of trend rate. You said we're already at about 2 to 3%. So volume will give us through, by going where the growth is first. And if the macros improve, we should go back to where we were.
We are optimistic that next year should, at least from a volume perspective, be better than this year on a full year basis. Yeah, though recovery, more optimistic recovery may happen from Q2 or maybe Q3 going forward.
And our strategy will be to remain focused on driving market share while sustaining profits. We are hoping that as the monsoons start to come and the election results come, etc., things will look much better. I would think that post-election, post-monsoon, we would be aiming towards a double-digit volume growth for sure.
The potential for growth in rural stepping up is much more than what we've seen historically, and that is where we remain cautiously optimistic. I think with the forecast of a good monsoon, with the forecast of spends increasing in rural, we would actually be cautiously optimistic about growth in rural stepping up beyond what we've seen in the past.
What we now see is, I think the rural, we saw some uptick in rural growth, slight uptick in rural growth towards the end of the quarter. The second thing which also happened is, at least in our portfolio, there was a lot of deflation in pricing that happened, a combination of price drops we took on Parachute and Saffola, as well as significant shrinkflation that happened in the value-added hair oils portfolio. So therefore, you would not see any pricing negative effect. In fact, there would be some inflation and an improvement in mix. If you take into account all that, we see a visibility of double-digit revenue growth.
Okay, double-digit revenue growth, that's what Marico is guiding. And in fact, a lot of these players, GCPL, etc., did talk about how FY25 is going to be better than FY24. Akshay D'Souza, the Chief of Growth and Insights at Bizom, is joining us on the show. Akshay, hi, good to be speaking with you. How sustainable do you think is this recovery? Is it too early to say that the worst is over? Or there are enough signs that gives you the confidence that rural recovery is only going to improve from here on?
Thanks for having me on the show, first of all. And look, I think the good news that I kind of see is I see green shoots, strong green shoots in Dabur. I see very strong green shoots in Nestle. And I tell you where this confidence comes from. So if you look at Nestle's report, I think they kind of said that they're now covering 2 lakh villages of India under direct distribution. You look at Dabur, they're saying they're covering 1.2 lakhs odd villages. What's important is that they've now taken direct distribution to rural and basically using that as a lever for growth. And that's what's fueling growth from rural today, which means building distribution infrastructure and making products available to rural consumers on a consistent basis is by itself driving growth. Consumption then becomes the next lever for growth on top of that. So I think that's what's kind of bringing a lot of optimism to me. And I think I can see that that definitely is a key trend going forward. And I can see almost all these companies that you mentioned earlier are actively pursuing a rural growth strategy and a strong distribution strategy for rural.
Right. But actually, to the point that Anisha was asking, whether it looks sustainable or not, because soon we're going to be, looking up to the skies to figure out whether it's going to be a normal monsoon or not. And I guess a lot of rural demand also is dependent on that.
Yes, monsoon definitely is a key factor. But like I said, monsoon is one of the factors. On top of the incremental business that you will generate from just being available, this next incremental business is definitely going to be generated from people having disposable incomes and strong disposable incomes. And the agri-led economy definitely plays a part. And I think that will definitely come as a factor. But one of the factors that you're actually seeing now playing out is a lot of companies are typically playing on the premiumization of the portfolio. And this premiumization is not limited only to urban. It's also kind of getting down into rural. And I think beyond your specific low price points, I think you have a segment of consumers, even in rural, who actually picks on premium products very actively. So I think that's the other strategy that is essentially going to drive growth for organizations beyond just having agri income for regular growth. But I think the premiumization is also another factor of the growth story.
Akshay, you made that distinction for us in terms of premium versus mass, but within the categories itself, is there a particular category that you are seeing a faster growth of? Let's say consumer durables, for instance, or within the food basket as well. It's largely staples, so there are other products which are doing better.
Yeah, so actually one of the factors that you're seeing move up right now, I think beverages definitely is in season. So you are seeing a very, very strong spike in beverages. Beyond that, we were seeing a strong growth on essentials and not so much on discretionary. But I would expect that the discretionary portfolio will now get driven further with premiumization. And there's going to be a lot of volume play that has happened. Some of these price cuts that have happened last quarter that kind of will stabilize now. And I think you will eventually lead it into, as you kind of hit the festival time, into even.
We seem to have snapped that line.
So I think this is how I think can see the categories moving for the moment. Consumer durables definitely going to play a big role, have a big season. I think we're looking at a strong double digit for them too.
Right. Actually, the other thing I wanted to understand was who's going to win a battle? And, this is more from a market perspective as well. Do you think it's those which with a larger rural exposure, they are the ones because the alpha generation there could be higher? Or the ones which have an equal weightage to both urban as well as rural markets are going to finally win?
Okay, that's a wonderful question because I think my thoughts on that are very clear. Anybody who's actively strategizing growth and pursuing rural as a strategy is winning today. And I think that's very, very evident. And I think if you look at, and that's where I kind of put Dabur and Nestle when I kind of began my conversation. So any incremental that you do to building that network and that product portfolio and that consumer is the guy who's winning the game today.
Just a last question before I let you go. Off late, we had also heard a lot of commentary about how unorganized and regional players were eating into the market shares of the listed companies per se or the larger players. And today as well, Marico was hinting that at the bottom end of the range, they are losing a bit of a market share. Anything that you have, kind of heard on the ground regarding that?
Yes, so there is an active movement that we are seeing, at least in packaged foods. Especially in biscuits. And I think you're seeing a lot of regional players who are seemingly doing well. Even in the bakery side, we're seeing some of that happening. I think one of the things that has happened is these regional players have now figured that they can leverage their brand beyond the pockets where they have. And there is a lot of equity lying in consumers beyond their core geographies. And I think I can see that move happening from brands based in the East. There are brands based in the North who are essentially moving the other side. And kind of widening their portfolio. So I think that is a strategy that I will see this continuing to go as brands figure out how to do direct distribution better.
Right. Okay, Akshay, great to have you on the show. Thanks for sharing with us that perspective on what's really going on within the FMCG sector. Sure enough, today all of them are the only star performers, perhaps. But Kunal, what closing ideas would you recommend then?
So ITC something looks attractive. I'll stick to the entire FMCG play as such. So I think ITC is on the verge of a breakout of a bullish flag pattern, and this could almost be a 15 to 20 pointer pattern for ITC on the upside.
Right. Naresh, what are your closing ideas?
So that would be a buy on ICICI Bank at 1130 odd levels. Looks a promising bet with a stop loss below 1120, expecting a bounce towards a new all-time high.
On that note, we're going to take a very quick break. Come right back. We'll continue tracking markets on the other side.
As the market is concerned, continues to be fairly muted, but within that, there are pockets of outperformance. Jyoti Labs, which was actually fairly quiet to begin the day when rest of the FMCG pack was doing quite well, has actually now shot up to the day's highest point, 8.5% on that one. CG Power, which is the result reaction, is higher by 7%. And even Westlife Development ahead of its earnings is fairly excited. In fact, talking about ahead of earnings, take a look at SRF and JSW Energy. Both come out with numbers today. And ahead of that, there's a definite weakness. Of course, SRF has the added pressure of US, tweaking the ADD on a couple of products. But other than that, both SRF and JSW Energy are on the lower side. And Paytm continues to trend lower. After that resignation that happened over the weekend of the CEO, that stock hasn't really managed to recover. Yesterday, it was down. Today as well, it continues to be under pressure. Devin Choksey joins us on the show now. Devin, hi, let's begin by discussing this new age tech vertical itself that we used to talk a lot more about and a lot more often rather than what we have seen of late. The likes of Zomato, Nykaa, PB Fintech, Policy Bazaar, Paytm for that instance. What within that looks like an attractive bet right now after the kind of price moves that we have seen?
Yeah, good afternoon, Nisha. Well, I don't think that immediately any of these names become very appealing and attracting to me, largely because of the few facts. Leave aside Paytm for a while now, because I think the underlying business model has to get de-established before we can any view on Paytm. However, I think when you look at particularly the Zomato, I think this company is showing some amount of better approach in form of collecting revenue and in turn becoming more profitable. So everything else at this point of time is fully priced in. And the way in which the valuations are currently, if you do not perform well, probably you will get the punishment. That is the kind of a caution that one will have to follow in this case. So till the point of time you have, the elevated valuation, that comfortable will not come. Business models are passing through significant amount of, reinvention in many cases. Unless you have a very solid underlying backend model, probably the disruption cannot continue the way it started with. So from that perspective, if you ask me, I would not probably chase any of these companies, for the valuation at which they are commanding currently.
Right. Okay, Devin, stay with us. Lots more to talk about. Let me quickly take it across to Ansh as well and find out what are the active volume buzzers in this market, given the decline that we've had and then now a smidge of a recovery taking place. Ansh?
Right, so we'll start with actually a Nifty FMCG index, which is the top sectoral gainer. The index has actually given a good breakout from its horizontal resistance zone and turned bullish from the consolidation of that 3-month consolidation period. The breakout has happened from 54,700, 800 level. Under FMCG index, we have selected 3 stocks. First is Hindustan Unilever. The stock has actually given a breakout from its reverse head and shoulder chart pattern with volume of over 3 times its average trading volume of last 10 sessions, and it has also surpassed above its 50 DMA level. Second, we have Godrej Consumer. The stock has actually given a breakout from its horizontal resistance zone, and which was intact for 3 months actually, and it has also touched all-time high level today. The volume here we are seeing of around 9 times its average trading volume of last 10 sessions. Third stock which we have is Marico. The stock has actually given a breakout from its downward sloping resistance zone with volume of over 20 times its average trading volume of last 10 session, indicating very strong participation in today's breakout. The stock has also registered biggest single session gain in over 3 years, and it has also surpassed about 200 DMA level. So keep an eye on the stocks.
Okay, price taken, point taken, that's the word coming in, Ansh, with respect to the price volume buzzers right now. But I wanted to put the spotlight on L&T as well as it reports numbers tomorrow. The stock is going a bit weak into the earnings. Overall, the expectation is that it's going to be a low teen kind of growth for L&T in terms of revenue. So we are penciling in a 13% revenue growth, while the EBITDA is expected to be just around that 10.9% mark. Remember, last year this number was close to around 12%. So overall, a bit of a dip on the margins on a year-on-year basis, and this is usually a stronger quarter for L&T. Having said that, in terms of the net profits, we're expecting a jump up of around 7%, so that the number comes closer to 4,300 odd crores. In terms of the order inflow expectation, it continues to be between 73 and 78,000 odd crores for the quarter. And overall, the company's guidance for the order inflow in this year was, as it is, very strong. They had guided for a 20% plus kind of order inflow, and more or less they're likely to meet this guidance for the year. Revenue in high teens, as well as the working capital situation is something to track. For the coming year, the guidance expectation stands at 12 to 15% in terms of revenue growth, a 50 to 100 basis point expansion in margins, with the order floats being flat to a -5%, and that's purely because the base is very, very high. Within the industrials, Devin, yesterday we had seen that Bank of America upgrade coming in on the likes of ABB, Siemens. Today, Morgan Stanley is talking about Titagar wagons and railways as a big theme to watch out for. And then, of course, L&T will be in focus with respect to earnings and the various segments it's present in. Within the industrials, what's your top bet?
Yeah, well, I think all these companies are definitely having some fantastic time going forward as well, largely because of the visibility has expanded significantly. Like the case of L&T, I think they have a visibility of at least 2.5, 3 years kind of a order book for execution. Similarly, I think the situation is extremely buoyant for the likes of ABB, Siemens, all those companies where basically I think the capital goods segment power play is going on currently. So from a perspective of I think business situation, I think these are companies which are very favorably placed. However, when it comes to investing in the market at this point of time, I believe that I think unless market gives some correction, the buying probably will take a longer time to give it the return if you end up buying at the current levels. So because of the fact that I think the valuations are already fully pricing in FY26 earnings per se. To a greater extent, I think I would like to buy, but the fact remains that I think when the market gives some correction and opportunity, it would be a better time to buy for the margin of safety.
Let me also take it across to Sharad and find out what the dealing room chatter is this afternoon that he's picking up and what are the stocks being talked about. Sharad?
Well, yes, what we are gathering from the dealers is that a DI selling is happening over the last 1 week for Angel One. It stated that a large PMS might be paring its stake in the company as well, and the stock itself is down 8% over the last 4 trading sessions. Importantly, the key DIs invested in the company include Nippon Mutual Fund, Canada Robeco Mutual Fund, to name. And also, the stock had its 52-week high levels at 3,900 rupees a share. So after that, there has been a significant correction. And also, fundamentally speaking, around a week ago, the numbers had come. The client acquisition growth, that has slowed down for the 4th straight month when it comes to Angel One. Now, the street is also expecting that there might be an overhang as the company is going into new verticals, especially the tech-heavy verticals, and that may actually weigh in on the margins. And also, street is factoring in higher ad spends also as well.
Thanks, Sharad, for that. But Nuresh, wanted your view on a couple of these stocks which are coming under pressure. Voltas, the company reports numbers today. And I remember that at the end of Q4, they had come out with that big announcement of having 72% jump in volumes on a year-on-year basis. But the stock ahead of the Q4 numbers is fairly muted. And the other one is Mahanagar Gas. That one too is down about 5%. Anything on the charts that you would want to flag out?
Would be interesting around 1300, 1350. That's the price point where it topped out back in 2022. So that should act as a support. That was also a gap up move very recently after that announcement. So that should hold. So closer to 1350 is where you want to buy. MGL is something which is a total avoid. We've not seen any clear trend across the gas spaces as such. For now, there have been many false starts. So avoiding the whole gas sector, specifically MGL, IGL as such.
Okay, that's the view coming in on some of the gas companies. In the meantime, just taking stock of what else has been happening. Lupin, of course, is down and has cracked after its numbers quite a fair bit. It's down about 6.25%. There's Oro Pharma also, which is lower by about 4.5% as we speak right now. Even I don't know how closely you've been tracking the pharma earnings, but anything that stood out anywhere where you would be tempted to add positions or buy afresh?
Is playing out for us that those companies which are having the complex generics and the specialty product manufacturing, they have been delayed to be reporting better numbers. Be it case of Lupin, which you probably saw today. I think the company is now remaining quite upbeat about the new products and its contribution going forward in the next 2 to 3 years as well, with a higher margin. Similarly, the situation with likes of Sun. And I would think that even DRL and Cipla could be similarly, well positioned in this entire space. Maybe our markets are currently reacting to the valuations. That's where probably some amount of negative of the readings are seen. But to my mind, these companies are looking very well set from the perspective of higher amount of growth. Even the likes of DVs and Laurus, who have been struggling for the last 2 years or 2.5 years, they are possibly showing relatively better signs of resuming their CAMS business and the APIs to the select customers that they are working with. So to my mind, I think the worst seems to be over in their case also. Of course, I think business numbers would further validate going forward in subsequent quarters. But to our understanding, I think the worst is behind them, and probably I think things should be looking relatively better for the likes of TV, likes of others going forward.
In fact, talking about some of these earnings, here's Lupin's management, Vinita Gupta, talking about their margin outlook going forward.
So we have shared that in the next 2 to 3 years, we would expect the EBITDA margins to get to the 22-23% level. In the near term, we are continuing to invest on the R&D front in our complex generic platforms, in particular driving the inhalation pipeline further into the products that we have targeted, plus injectables, accelerating our injectables portfolio. So we expect our investment in R&D to go up as well in fiscal year 25, and still sustain the 20% plus EBITDA margins for the year. As we look at rolling out our pipeline and continuing to grow our business in India, US, plus other regions, we would expect to get to that 22-23% level in the next 2 to 3 years.
Okay. Right. Okay, that's the take coming in from the management of Lupin. In fact, since we're on the subject, Dr. Reddy's is slated to come out with its numbers. Let me quickly take it across to Shrishti and find out what the ET Now poll is penciling in.
All right, when it comes to Dr. Reddy's, then we are not expecting much this time around because it's expected to be a muted set for Dr. Reddy's, while on a sequential basis, we are expecting a 7% decline over there. And the reason could be no big launches in the US markets, and there was a little bit of competition as well when it comes to their base business. When it comes to the sequential performance, be it revenue, EBITDA, as well as margins, a flattish sort of a performance is what we are expecting. Margins expected at 27.9%, while on the profit figure, 1,290 crores is our expectation. When it comes to the India business specifically, we are expecting the sales to have an uptick of 10% on a YY basis, while for the US business, the revenue expectations of $412 million. And the key to watch will be the contribution from G-Rev Limit, because analysts in the estimates are factoring in that this time the sales could be around $140 million for the US in Q4, and that's a little bit of jump from $135 million that the company reported in Q3 of FY24. When it comes to the Russia as well as other CIS countries, then there too we are expecting a double-digit growth on a YY basis. So all in all, not much fireworks we are expecting from Dr. Reddy's numbers, but on the commentary side, key will be to watch out for some of the new launches that the company is planning in the North America market. Apart from that, the GLP-1 opportunity that they are looking at, and some of the key launches that the company is looking forward to in the China market as well. So all eyes on Dr. Reddy's. Thanks so much for that. In the meantime, the numbers of SRF are out, and I'm just looking at the consolidated number on a year-on-year basis. The total revenue from operations is actually coming at 3,569 crores versus 3,778 crore in the year gone by. So there is a dip, and I think this has come in lower than street expectations. Even on the profitability bit, the profit has come in at 422 crore this quarter. Last year, this number was closer to 562 crores. That is in FY23 Q4. So there is a bit of a dip both in terms of revenue as well as profitability on a year-on-year basis. On a quarter-on-quarter basis, however, there is a bit of a jump in terms of revenues. It's 3,569 crores compared to around 3,050, and the profitability has improved materially. But I think the expectation was closer to 500 odd crores on the bottom line. The actual number has come in at 420 crores, and maybe the street had sniffed these numbers already because the stock was down since the start of the trading session, and it's not reacting too much to the miss on the earnings right now. But that's the actual numbers from SRF. What about the earnings expectation from Hero MotoCorp as well as TVS Motors? Shrishti is back with us. Shrishti, walk us through the expectations for these two auto giants.
Yes, two auto giants, Hero MotoCorp and TVS Motors, all set to report earnings. And this time, whenever we track the auto companies, the key to watch is the volume growth that the company has witnessed in the quarter gone by, as well as in the times ahead, how the margins of the companies are expected. That is something that we will be watching out for. When it comes to Hero MotoCorp, then this time we have seen a single-digit decline in the volume sequentially, but double-digit volume growth on a YOY basis, and that's exactly what we're going to be seeing on the numbers as well. A double-digit growth on a YOY numbers. Revenue expected a jump of 12%. EBITDA expected a jump of 21%. Margins expected to be intact at 14.1%. This number will be a key to watch out for, and the kind of a YOY push in the margins could be on the back of higher volumes as well as higher average selling price. And lastly, on the profit figure, 1,026 crores is what we are expecting for Hero MotoCorp. So do watch out for the margin figure of Hero MotoCorp and the commentary on the demand going ahead, especially the rural demand. We will be watching out for that. But when it comes to TVS Motors, interestingly, herein the volume of the company is actually quite good when it comes to the export markets, because the domestic volumes grew by 17% on a YOY basis in Q4, but the export have jumped 47% on a YOY basis, but that's on a low base. All in all, if we see, the revenue is expected to see a jump of 21%, 8,000 crores is the expectations, margins expected at 11.2%, and the profit expected at 528 crores. So all in all, we can say that the margins will be the key to watch out for, but for both the companies, we are expecting the margins to be flat on a quarter-on-quarter basis. So any deviation on that particular number will be a point that the stock can react to. Back to you.
Absolutely. It's going to be a busy one when it comes to two-wheelers. But Devin wanted your opinion, because much of the rural recovery, which now seems pretty evident, and not just, for two-wheelers, we've heard the same commentary from FMCG as well. But is the best already baked into the prices for both Hero MotoCorp, the way it's shaped up this year, and TVS Motors, how it's been for the last entire 1 year?
Yeah, I think most of it, as you rightly said, is in price. I think clearly the moat, I think, is with Bajaj, as I see it in the two-wheeler space particularly, because of the kind of models that they are talking of launching. They give the visibility of not only taking away some amount of market share from the competitors, but also the fact that I think the volume growth will be on a higher side because of the early start with the new models that they are talking about. At the same time, their margin equity business. So certainly, I think the premiumization function, I think our process is running well for Bajaj in this case. So if at all one has to probably, I think, be looking at more convincingly about, I think, the two-wheeler space per se, I think in my viewpoint, I think it should be Bajaj first to begin with, and then TVS thereafter.
Right, okay. Let's get in some BTST trades as well going, while SRF hasn't seen much of a recovery. In trade after its numbers. But Kunal, what about some BTST ideas if you may have?
So I'll go with a buy on an IT name, large cap IT stock, Wipro, for, I think the stock is looking like more of a breakout candidate. For the first time, I think the last 3 months, the stock is about to close above its 20-day moving average. So this could be a possible turn of events for the stock over the near term. So it's best to buy with a target of 500. Stop loss could be kept at 444. And Jubilant Food is something which I recommended in the morning. Did pretty well so far. The stock had come back towards the 495 to 500 zone. So I think at current levels, traders could look at a fresh buy. Targets revised on the upside to 520. Stop loss trade to 464.
Right. Okay. And Naresh, what about your BTST ideas?
First is a buy on ICICI Bank, stop loss at 1120, target price of 1160. Second is a buy on Chambal Fertilizer, which has seen a good 10% correction from the top back to the breakout point. Stop loss at 383, target price of 400.
Those are the top recommendations coming in from our chartists at this point of time. Just wanted to look at a couple of other big buzzers in the trading session as well. You, of course, have on the losing side names like Rainbow Children, Just Dial, Chennai Petro. They are coming under pressure. While in terms of the other updates, of course, you have FMCG that continues to gain ground. There are important flashes at the bottom of your screen on Concor, wherein Morgan Stanley has actually upgraded the stock to an equal weight from an underweight. So it is a upgrade coming in of sorts. And the target price has been high materially, 1,076 versus 729. And that's because the rail freight market is expected to improve quite a bit. Quickly, Kunal, a word on Concor if you track this one, and would you be a buyer in this name?
Well, Yeah, I think at current levels of 995,000 approximately, the stock looks to be attractive. It's come back towards a 2-day mean reversion from 1,075. So a 7 to 8% correction into the stock price, still trading above the 50-day moving average, would be a buyer at these levels.
Okay, in fact, Titagarh as well is the other stock that I want to bring up for you on your screens, because that also started off the day pretty well. Morgan Stanley initiated an overweight stance, a target price of 12.85 on this particular stock, saying that they see strong evidence of a revival when it comes to the Indian Railways, and they believe that Titagarh is also a large beneficiary of that. The stock is holding out very well today, almost a 5% uptick in an otherwise weak market, across market caps, that is, both large caps as well as mid and small. So that's looking pretty good in trade right now. But even separately, what I want to talk about is some of these new IPOs. Indegene, which is currently on. Next is going to be Aadhar Housing as well. Have you taken a look at any of these?
These are coming up with a little interesting proposition. Indegene in particular, I think, is basically, as I would call it, as a complete service provider to the pharmaceutical segment in the business. So I think this company is having a predominantly larger amount of position, as I see it, in the books of many of the pharma companies, because of their ability to provide the services, I think, in different areas of including R&D part of the activities. Looks promising, though I'm not too sure about, I think, the valuation. Market definitely is wanting to give premium. But as I see it, I think I would probably like to buy when the valuations are not so expensive with a margin of safety. Similarly, for Aadhar, the micro housing finance company, per se, I think remains absolutely promising given the kind of a rural housing activity which is happening in the country. So certainly, I think they underwrite those housing assets which are basically supported by the government schemes. And as a result of which, I think they should be working relatively stable as far as I think their business outlook is concerned. Maybe on a larger number of customer base, I think they will be generating relatively smaller number of revenue. But overall, I think the model looks relatively stable, as I see it. As long as they manage to get the funds at which are competitive cost, I think they should be getting a fairly good valuation also.
Very good valuation, but since we're talking about the primary market, the other one that might hit the street very soon is, of course, Go Digit. That's what my colleague Anurag is picking up from his sources. Let me take it across to him to get more details on the story. Hi, Anurag.
After multiple delays, now Go Digit General Insurance is all set to launch their IPO on 15th of May as per our sources, and the price band for the IPO will be announced on 10th May. So total IPO size will be of 1500 crore, in which 1250 crore will be fresh issue and around 11 crore equity share will be offered by existing shareholders and promoters under the offer for sale route. So Go Digit is primarily into motor insurance, health insurance and property insurance, and the proceeds from this IPO will be used by company for the further growth to enhance their solvency as per the details we have got. So Go Digit is a general insurance company promoted by Prem Vatsa of Fairfax Group and insurance veteran Kamesh Goyal. Anushka Sharma and cricketer Virat Kohli are also investor in the Go Digit General Insurance.
Right, quite a lot of new paper slated to hit the markets. But what is happening with the market right now? No recovery in sight, a little bit definitely off from the lows of the day. ITC, Unilever, Nestle, they continue to put on more and more weight. Similar is the case with the Brokerage Consumer and Marico, which is now almost 10% higher. Unilever is now scaling higher in excess of 5%, and that's the case with Dabur as well. I don't know why Jubilant Foodworks is also seeing an uptick along with them. But other than that, Kotak has seen a bit of a recovery, and to be fair, it was largely sort of languishing for the better part of today's trading session. That spiked up to the session highs right now, but the rest of the market hasn't seen any meaningful move. Kunal, is the worst behind for Kotak Bank though on the charts?
Yeah, looks like. I think after that 3 days of very sharp sell-off, and the stock, I think on a single day first corrected by more than 10%, and then the subsequent next 2 days the stock had fallen by another 4 to 5%, closer to 1530, 1540 approximately is where the stock had made a low. And in that 1 week of sell-off broadly, the stock had formed a triple RSI divergence where for 3 consecutive points on the price charts the stock was making new lows, for itself, even though by a thin margin as compared to the previous leg of correction for the stock. And on all of those three occasions, the RSI was slightly higher for the stock, which means that a near-term bottom could be in place for the stock price. But the bigger concern is that if in case the markets get into a second phase of a correction, so we've already seen from 22,800 approximately, the Nifty coming back to that 22,300 odd mark. But if there's another round of correction for the indices, then I would probably believe that Kotak Bank and many of the other private sector banks can also go into that mean reversion phase. So not too much bullish into the stock price as of now, but would wait out for dips to try and go for a contra buy.
Right, okay, that's the take coming in on Kotak Mahindra Bank. Deven, just as a market strategy, given the heightened volatility of late, what is it that you're doing? Just sitting on the sidelines, or are you still scouting for opportunities or buying anything afresh or adding positions to perhaps?
Well, I think certainly the market gives you correction of a sharper degree in individual stocks. I think definitely one will have to look around for a good amount of buying opportunity. Of late, I think for the last 5-6 months, I think we haven't been participating aggressively by buying into the new stocks. And probably I think this correction, if it is resulting into sharper degree of correction with the price, I would think that I think it should be a buy opportunity in some of the good names like Tata Technology, I think, which has done, I think, a good listed market entry, but with a significant premium. Such kind of companies, when they start getting available at a compelling valuation, I think they could become a buy opportunity. And similarly, some of the frontline companies where the fundamental strength is extremely strong, the likes of Reliance, likes of Tata Power, Tata Motors, those kind of companies, when the correction happens, I think it is a buy opportunity.
Okay, on that note, Deven, we let you go. Thanks so much for making time and speaking with us. Just quickly wanted to flag out the SRF commentary which they've come out with. They're saying that recovery in the chemicals business will pick up in the second half of FY25. They're cautiously optimistic about the prospects of the packaging business in the near term, and technical textile business continues to focus on improving the sales of the high-end products. So that's the latest coming in. But for now, the stock is not seeing any reaction, continues to be down and out. Let's wrap up for the trading session, because overall it's a day that bulls would want to forget. We managed to defend the 50-day moving average at the index level because we're just around the 22,300 mark. But otherwise, if you look at the advanced decline ratio, it's fairly skewed towards the declines right now, with 1,900 stocks declining to only 500 stocks advancing. Most of the sectors are going home with a bit of a red tinge, barring FMCG and maybe a few IT names. Rest of the sectors were in the red in the trading session today, and heavyweights, they did not participate at all. Whether it was a Reliance, whether it was an HDFC Bank, ICICI Bank, they were all seeing quite a bit of pressure. Even Bajaj Auto for that matter, no reason as such, but that stock was down 4%. Tata Motors was down about 3%. What stood out was clearly FMCG, so HUL 5% higher. You also have names like Marico, GCPL, Britannia, ITC, Nestle. The list is really long of all of those FMCG gainers in the trading session. And then, of course, TCS Infosys also batted for the bulls. Within the broader markets, we had Titagar Wagons, which was reacting to that Morgan Stanley initiation on the positive side. There were also earnings reaction coming in on a few of the companies. And then, of course, the likes of Nykaa, RK Forgings were also in focus. On the losing side, Rainbow was down 8%, SIAT was coming under pressure, Sobha was seeing quite a bit of profit booking, and ditto can be said for Prestige as well. Though by the end of the trading session, Prestige actually managed to recover a bit because it ended only 5% lower, and I say only because earlier it was down 8 to 9%. And then earnings reaction is what we're waiting for from the likes of JSW Energy as well as Voltas. But with that, we are wrapping up this trading session with the Nifty being just around the 22,300 mark. We'll see you bright and early tomorrow morning.
In association with State Bank of India, the banker to every Indian. Solid Bank is solid backing.